How's it going, guys? Today we're going to be looking at Costco's earnings. This is from Q3. This is May 29th, and we're going to take a look at their financials and understand how this company is performing right now. But first things first, they had a net income of $1.9 billion, representing 13.2% year-over-year growth, and they posted a diluted earnings per share of $4.28 per share, which represents 13.2% year-over-year growth. And just to compare that to the expectations, they beat earnings per share expectations of $4.24 by posting $4.28, but they slightly missed on revenue expectations. Expectations were $63.31 billion, and they had $63.21 billion. However, I do think that is somewhat offset by the increase in profitability for this company, showing that they're able to expand their margins while at the same time slightly missing on revenue expectations, which is completely fine, especially considering the tariff environment we're in and maybe a little bit of slowdown in consumer spending. But gross margins were 11.25%, which it says here was plus 41 basis points versus Q3 of 2024, which is absolutely phenomenal. So it's looking really good so far. As far as sales, they had comparable sales growth in the U.S. plus 6.6%, and they had adjusted comparable sales growth in the U.S. of 7.9%. Overall ticket was up 1.1%, and traffic, big one here, was up 5.5%. Canadian sales were up 2.9%. However, they did have a ticket decline in Canada of 1.3%, which is okay. Also, traffic was up 4.3% in Canada. But we're going to take a look at, we'll look at their sales first, and then we'll take a look at their balance sheet. But overall net sales were $62 billion. That's plus 5.7% comparable sales. And that was 8% overall growth in net sales. E-commerce comparable sales were up 14.8%, which is absolutely phenomenal. Adjusted e-commerce comparable sales up 15.7%. So really cool stuff there. Sales are increasing. Costco overall had a pretty solid earnings report. But what I love the most is definitely their balance sheet, which we'll get to in a second. Their membership fees did rise. Their overall revenue from that was $1.24 billion, up from what was May 12th, 2024, which was $1.123 billion. So that's cool to see. Overall net income was $1.9 billion compared to $1.681 billion in 2024 for the same quarter comparable. Diluted earnings per share in May 12th, 2024 was $3.78 earnings per share. And in 2025, here we are, Q3, $4.28 earnings per share. But honestly, what I love the absolute most about this company was their balance sheet. Balance sheet is looking really solid here. So cash and cash equivalents rose. So in 2024 Q3, this is September 1st, 2024, they have $9.9 billion in cash and cash equivalents. Here we are, May 11th, 2025, they had $13.8 billion in cash and cash equivalents. So this company increased their overall cash on hand. And the other nice thing is their total assets increased too. Total assets increased by about $5 billion, up from round up $70 billion, now at $75 billion. And the best part too is their debt actually kind of shrunk. They had a little bit of a long-term debt shrinkage, and they also had a minimal impact on their overall liabilities while increasing cash on hand and their overall assets. Really attractive stuff from this company. It shows here that their total current liabilities only increased by about $2 billion. It was $35 billion in 2024, and now we're at $37.5 billion here in 2025. And we have long-term debt shrinking slightly, actually. It was $5.794 billion in 2024, and here we are at $5.717 billion in 2025. So really nice stuff there. They reduced their overall debt, increased cash on hand, while at the same time having awesome growth in their overall sales. So total liabilities only increased by about $2 billion. Comparably, like assets rose about $5.5 billion. Really strong stuff from this company, especially considering that they were able to grow their sales at such a nice rate. It didn't cost them more to increase those sales, which you see a very common issue with companies that fail to be profitable is that they're spending a lot more money than they're actually getting a return on for those sales and that overall net income to grow. But overall, this company is looking pretty solid here. Now, I want to take a look at the valuation real quick, though. And you got to understand something with Costco. This company, it performs phenomenally, but you're going to pay it at a premium. So you have a PE ratio right now of 59, and you have a forward PE of about almost 56. And that valuation is not great. However, This company is growing at a very, very fast rate. And that's pretty much what you're paying for, is the fast growth overall in Costco. Let me know if you think that this company is a buy right now. I really like these earnings, but I'm not liking the overall valuation. However, Costco stock continues to be an absolute beast because this company is so freaking profitable. So let me know if you think this is a solid buy or what you have as a differing opinion. If y'all got value from this video, please consider subscribing. Thank you.